Silver did something shocking this year. It didn't just rise a little or move the way it normally does. It broke a major price barrier for the first time in modern history, surprising almost everyone who watches the markets. And the reason behind this jump is not what most people think. Physical silver didn't fall. Physical silver didn't freeze. Physical silver disappeared. A large amount of silver simply moved out of the market, and when people saw that sudden drop in available supply, panic spread across the globe. Today we uncover the full story of the hidden warehouse that suddenly lost its silver, the chain reaction that followed, and why this moment may change the silver market for many years. Stay with me, because by the end of this video, you will also understand whether silver is still worth buying today, and why physical silver and online silver behave very differently when the world is under stress. Silver crossing $60 per ounce was more than just a headline. It was a moment that signaled a deep structural shift in the global economy. Financial Times and Reuters both reported that this was the fastest silver surge in more than a decade, and the rise shocked traders, investors, and even central banks. Normally, silver prices move slowly because the market is balanced by mining, recycling, and investor demand. But this time, something different happened. The jump did not come from hype, rumors, or social media excitement. It came from real-world shortages, actual missing metal from warehouses that normally supply the world. When investors saw that supply was shrinking and demand was rising at the same time, the entire market flipped. Instead of climbing gently, silver raced upward, breaking levels that many people believed were years away. Let's break down the mystery that made this story explode. When people online said a warehouse vanished, they did not mean that a building collapsed or burned down. What happened was much more serious for the global silver market. On the COMEX exchange, the world's largest marketplace for silver futures, silver is stored in special vaults. These vaults report exactly how much silver is ready for delivery. There are two types of silver in these vaults. Registered silver is the silver that is available for immediate delivery to buyers who request it. Eligible silver is also real metal in the vault, but it belongs to private holders and cannot be delivered unless the owners decide to make it available. Last month, something unusual and alarming took place. A massive amount of registered silver was removed from the system in a very short period of time. Analysts from Bloomberg and the London Metals Exchange reported a steep drop in COMEX delivery-ready silver. This silver was not destroyed. It was quietly moved into private vaults, transferred overseas, or taken off the delivery network by large financial institutions. This sudden outflow meant the world now had far less deliverable silver than traders assumed. Markets hate surprises, and this shock became the spark that set off a full-scale global panic. That is why people said a warehouse vanished, because the available silver effectively disappeared from the public market. While COMEX was losing registered silver, something even more dramatic was happening on the other side of the world. Bloomberg and Shanghai Metals Market data revealed that China's silver inventories fell by more than 80% compared to last year. This was not just a small dip, this was one of the sharpest silver drawdowns recorded in modern times. Because China is the world's largest industrial silver consumer, this shortage created huge pressure on global supply. Chinese factories that produce electronics, solar panels, and precision equipment struggled to get enough metal. Solar companies paid higher contract prices. Electronics manufacturers faced delays. Battery producers felt squeezed. When the world's largest silver-using economy begins to run low, the entire global system feels the shock. Suddenly, people around the world realized something powerful and terrifying. There is not enough silver for everyone. And once that realization spread, the price of silver exploded even faster. For many years, silver was called a poor man's gold, but today it is one of the most important industrial metals on Earth. Silver's unmatched ability to conduct electricity makes it critical for the technologies that are shaping the future. Solar panels require silver paste. Without silver, they simply do not work. Electric vehicles need silver for wiring, sensors, and charging components, and each EV uses up to twice as much silver as a normal car. AI data centers and fast electronics rely on silver for high-speed connections. Medical devices, batteries, and advanced machinery also require silver. According to the Silver Institute, industrial demand reached record highs this year and is expected to keep rising. When industrial demand grows faster than mining output, shortages become inevitable, and that is exactly what we are seeing now. One reason silver supply cannot rise fast is because silver is rarely mined alone. In fact, almost 80% of the world's silver supply comes as a byproduct of mining other metals like copper, zinc, and gold. This means that even if silver prices double, mining companies cannot easily increase silver output unless copper or zinc mines also expand. Unlike gold mining, which can ramp up production when prices rise, silver has a built-in limitation. This explains why silver shortages last longer and why new supply cannot arrive quickly enough to calm the market. The world may need more silver, but the mining system simply cannot deliver extra tons on demand. Another part of this story comes from the quiet but powerful actions of large financial institutions. Precious metal analysts have tracked a pattern over the last decade. A major U.S. bank, believed to be by many to be JPMorgan, accumulated massive amounts of physical silver over many years. Every time silver prices dipped, they appeared to purchase more. Why does this matter? Because when banks move silver into private storage, that metal no longer counts as available for delivery. This shrinks the supply of registered silver on COMEX and increases the pressure on the remaining inventory. When the recent warehouse withdrawal happened, these large private positions magnified the shortage and helped drive prices even higher. Big banks understand supply dynamics better than anyone, and their behavior signaled that something major was coming.
While big banks were removing silver from the system, something else happened. Everyday investors rushed to buy silver coins and bars. Dealers in the United States, Canada, India, and Europe reported long wait times, higher premiums, low inventory, and even complete sellouts of popular coins. When dealers run out of silver, even when the spot price is rising, it shows real-world physical stress. Premiums on some coins reached 10 to 20% above the official spot price, meaning people were willing to pay far more just to secure physical metal. This is not hype. This is classic supply and demand pressure hitting the breaking point, something that only happens during true shortages. One of the most important things investors must understand is that there are two silver markets, a physical market and a digital or paper market. Physical silver, bars, coins, and rounds, is metal you can touch. You own it directly. There is no counterparty risk, meaning no bank or broker stands between you and your metal. It protects you during financial stress, and it reacts most strongly during shortages. But physical silver has downsides. Premiums rise during shortages, it can be harder to sell quickly, and you must store it safely. Online silver, or paper silver, includes ETFs, digital silver accounts, futures contracts, and certificates. These products are easy to buy and sell, have low premiums, and do not require storage, but they come with serious limitations. You do not own physical metal. Many online silver products have far more paper claims than the actual silver behind them. During shortages, these digital products can disconnect from the real market, and delivery may not be possible. History shows that in tight markets, physical silver outperforms digital silver because people want the real thing, not a promise. To understand today's market, we must look at past silver surges. In 1980, during the Hunt brothers' attempt to corner the market, silver hit $50, and physical silver nearly vanished from public availability once delivery stress hit COMEX. In the 2008 financial crisis, spot silver crashed, but physical silver coins held their value because people feared bank risk. In 2011, silver again touched $49, and premiums rose faster than spot prices. In 2020-2021, during the pandemic and silver squeeze, spot prices rose modestly, but physical silver premiums jumped 30 to 50%, and many dealers went out of stock for weeks. Every event teaches the same lesson. When fear rises, physical silver beats digital silver. This is not financial advice. Instead, here is a simple, history-backed explanation of who silver helps and who it doesn't. Silver may make sense if you want long-term protection, a hedge against inflation, or exposure to fast-growing industries like solar, EVs, and electronics. It can also help people who understand that silver is volatile. Its price can swing 10% in a single day. Long-term holders tend to perform better than short-term traders, and during shortages, physical silver generally performs better than online silver. Here is something many people don't see. Even after the recent surge, silver inventories are still falling in several regions. China's stockpiles are still low. COMEX registered silver is still under pressure. Industrial demand is still rising, and mining cannot increase fast enough to catch up. This means the shortage is not over. If another warehouse withdrawal occurs, or if factories rush to restock their supplies, silver could break new price levels again, not because of hype, but because the world may simply run out of easy silver. Silver has always been the quiet metal, not as famous as gold, not as loud as Bitcoin. But today, silver is telling a very different story, a story about shortages, hidden warehouses, industrial demand, big bank accumulation, and a future where silver may become one of the most important resources on Earth.